While many people have heard of Bitcoin, buying it directly from a crypto exchange can be costly for most folks. But there's another way to get your hands on some Bitcoin: mining. Mining is like solving puzzles with powerful computers, often using specialized hardware like graphic cards. These puzzles are complex mathematical challenges that secure the Bitcoin network. When you successfully solve one, you're rewarded with small amounts of Bitcoin. It's a bit like digging for gold in the digital world, but instead of shovels and pans, miners use computers to unearth new coins bit by bit. Bitcoin halving is an event that occurs approximately every 4 years in the Bitcoin network, specifically after every 210,000 blocks are mined. During this event, the reward that Bitcoin miners receive for validating transactions and securing the network is reduced by half. This halving process is programmed into the Bitcoin protocol as a way to control the issuance of new Bitcoins and to ensure that the total supply of Bitcoins remains finite, with a maximum cap of 21 million coins. When Bitcoin was first created by Satoshi Nakamoto in 2009, the block reward was set at 50 Bitcoins per block. After the first halving in 2012, the block reward was reduced to 25 Bitcoins per block. The second halving occurred in 2016, reducing the block reward to 12.5 Bitcoins per block. The most recent halving took place in May 2020, reducing the block reward to 6.25 Bitcoins per block. Bitcoin halving events are significant because they affect the rate at which new Bitcoins are created and introduced into circulation. This reduction in the rate of new supply issuance has historically had an impact on the price of Bitcoin, as it reduces the potential selling pressure from miners. Some investors anticipate halving events as potentially bullish catalysts for Bitcoin's price, although the actual market impact can vary. The historical impact of halving on the price of Bitcoin is significant. Prior to the first halving on November 28, 2012, the price of Bitcoin hovered around $12. Following the halving, where mining rewards were slashed from 50 to 25, the price surged dramatically, reaching a peak of approximately $230 per Bitcoin. However, this surge was short-lived, as the price quickly plummeted to $68 in just a few days. This fluctuation exemplifies the inherent volatility surrounding halving events. In 2016, the block rewards for Bitcoin miners decreased from 25 to 12.5 Bitcoin per block. During this time, the price of BTC was approximately $600. As anticipated, Bitcoin experienced its typical post-halving surge, soaring by 60% and reaching the $1,000 milestone shortly thereafter. The year 2020 diverged slightly from previous patterns. Bitcoin encountered a significant dip, plummeting to $3,000, a concerning turn of events. However, within 2 months, the price rebounded to $9,000, signaling a shift in momentum. From that juncture, Bitcoin embarked on a relentless upward trajectory. By the conclusion of 2020, the price of 1 BTC had skyrocketed to a staggering $30,000. The most recent halving occurred on April 19, 2024. Around this period, BTC reached its previous all-time high and remained stagnant in the $70,000 range. The entire event unfolded with a sense of calm and gradual progression. However, a few weeks later, the price began a slow decline, coinciding with the reduction in mining rewards to $3,125 per block. Predicting the price of Bitcoin post-2024 halving involves various factors and uncertainties, including market sentiment, adoption rates, regulatory developments, and macroeconomic trends. However, based on historical patterns and ongoing trends, we can make a speculative forecast. Given the diminishing supply of new Bitcoins entering the market due to halving events, coupled with the increasing adoption of Bitcoin as a store of value and investment asset, it's plausible that the price could experience upward pressure over the mid to long term.